everyone can see my screen right now. If you cannot see my screen, please quickly give me a complaint in my WhatsApp. So that, but if you can see my screen, also tell me if you can see my screen on WhatsApp so that we can begin. Okay, so you can see my screen. All right. So, okay, so don't feel because of you see this setup, please, you're not gonna take it though. You go shop yourself, please. That's my advice to you. But I don't know why. I've shared my screen. I can't control the stuff. This is my first time using Telegram or this kind of listen. I can't control the screen. It's really stressful for me. All right, so I'm pretty sure you guys can see my screen and wait, please just let me know if the screen is shaking. Let me know if the some people can still join the Telegram. Okay, they said the screen is shaking. Screen is shaking, but Telegram video quality is low. So I hope you guys can see. I hope you guys can hear me. Okay. All right. So we begin now. Um, like I said, we'll be having right. So, like I said, we'll be having four sections. Where I am is really noisy because people are working on my apartment at the moment. You understand? So it's very, very noisy. So you guys should just bear with me. But the next class won't be like this. I'll try to make a way even before then. All right. So like I said on structure that once you have that we have oh, where's my messages? Okay, like I said on structure, I said we have an uptrend, we have downtrend, we have ranging market. So once you have the market now moving on an uptrend movement, you will surely get what we call pullback because for the market to fill in some liquidity or for the market to take out some points, the buy side or the sell side, there must surely be a retracement. So even if you are on a sell or you're on a buy, you will get something like retracement because retracement not just see a buy just giving you an impossible just buying steady without the market coming down even a bit. It will surely come down a bit, then continue that up movement, come down a bit, continue that up movement. Then if you're on a sell trend, it will surely go up a bit, then continue that down movement. And one thing about this structure is that when you have an uptrend or downtrend, most of the times, if the market creates a replacement point, after creating that replacement point, the market usually use that replacement point to form and break the previous low or high that was being created. So what do I mean by that? My voice is cutting. This one that you guys are saying my voice is cutting again. See, I don't know. My Zoom was allowing more than even 1,000. And I subscribe to it. I'm still subscribed to the Zoom. I don't know what's wrong. Some people are complaining that my network is bad. Somebody said it's their network. Can you guys hear me clearly? And some people are saying they can hear me well, they can see everything well. Why are some people? If you are not hearing me properly, it's your network. If you are not hearing me properly, it's your network. So I want to begin now, and I'm not breaking again. I want to start. All right. So, like I said, if we're having an uptrend, for example, there is what we call a pullback, and that pullback is always bound to happen. This is a advanced class and not a beginner's class. So, for example, now if we're having an uptrend, the market is going to create a little pullback. So, if this is the pullback, for example, that was being created, that recent pullback, the market is going to use that pullback to break the next high. As long as you know that, okay, this is an uptrend movement. So after the break, it will surely create another pullback again, go up again, another pullback again, go up again, another pullback again, go up again. Now, there's a reason why I'm explaining this to you. Now, we do pay attention to those pullbacks because those pullbacks are points that you know that, okay, anytime a pullback is being created, the market is supposed to respect that pullback, most especially when that pullback has broken the structure. So what do I mean by that? If this was the recent pullback that was being created at this zone, for example, this is the newest pullback that was being created, and the market used that pullback now to break the recent high. So this is the recent high that was also being broken. So here we have the structure. So now you can see that start creating a pullback. The market now use that pullback that it's using to create bring the structure all the way to the top side. Change to tell you that what it wants to continue that is not trend. And each pullback is something you should pay deep attention to. Don't neglect any pullback. Pullback are something that once it's being created, the market is not expected to break it or fail that pullback. So if this is our recent pullback, for example, and the market fails to respect that pullback, then come all the way to the down like this is to tell you that what a sell trend is about to occur. What do I mean by a sell trend is about to occur? Remember, this class is for what I said this class is for structure. Guys, I'm recording, don't worry. This class is for structure. So we are not dealing on point of interest. We'll be talking about point of interest later. This class is basically on structure. So because if you understand structure, that is when you can be able to apply point of interest. If you don't understand the class, you need to understand clearly structure and top-down analysis. Once you understand structure, top-down analysis of advanced financial, you are good to go. To get my point of interest is very easy, but do you know when to buy? Do you know when to sell? That is the major thing. So now, if this is an uptrend, like as I was saying, and the market fails to respect the retracement point. So this is the retracement point that the market creates now. The market fails to respect it and break all the way to the downside. It's trying to tell you that what a sell trend is what you should start looking for. And there is a way I catch my sell trend, my point of interest. But we're not dealing on that. So now it's not like once the structure has been broken all the way to the downside, you just start taking sell. No, I wait for retracement for the market to retrace all the way to these zones before I start taking my point of interest to come all the way to the downside again. So this thing I'm explaining is still same thing for the cell structure. Same thing for the cell structure. Let me delete this first before I start talking about the cell structure. Okay, so for cell structure, this is how the market usually sells. So if this is the recent created, if this now is the recent created retracement point, the market is expected to respect it. Most especially when that retracement point was created and the market point to break a low. Most especially if you see something like this, know that retracement point is a very active retracement point. It's a retracement point that the market is not supposed to come back to. So if the market now fails to respect that retracement point and go all the way to the top side, this is trying to tell you that what a buy structure. Just see if you are on a buy, if you are on a sell trend, you know that you have been selling from the top side, meaning you have been selling all the way from this point, for example. Know that just know that a buy is what you should be looking for. So just close any of your sell. Immediately you see something like this, the market breaking previous retracement point that close structure previously, breaking like this for the top side, and the market start retracing to the down, just start looking for buys rather than sells. Remember, we're not talking on point of interest on this class. We're not dealing on anything about point of interest. I just want you guys to understand the structure point of the market. So now same thing goes for the retracement, the ranging markets. Same thing goes for the ranging markets. If we're having a ranging market, for example, so for example, this is a ranging market. If this is a ranging market now, I do mark out the highs and the lows. So this is the high, for example. This is the low. Now, it's expected of the market to respect each of every of the highs and low. But it's not every ranging market you see this way. Some of the ranging market are really choppy, like just crazy. But once you see a ranging market, like a market giving you highs and low, it's expected of the market to respect both the highs and respect both the lows. So any breakout that occurs either to the upside or to the downside, the market usually continues that movement. So if the market break to the upside, you usually continue buying all the way to the top side. Same thing goes for the sell side. If the market break the sell side of the ranging market, for example, just like this and come all the way to the down, it will just continue selling. Maybe it will give a little retracement and continue selling all the way to the down. So that is something I want about the ranging market. And Ranging market is really good on higher time frames. If you have a ranging market on daily time frame or 4 hours time frame, and it's clearly shown like this, it's very hard for you to see this kind of ranging market. But once you see this kind of ranging market on high time frame, daily time frame, 4 hours time frame, it is very sweet. Why did I say that? Because you will be taking both the sells and buys. You understand? But at least close your trade from the 70% of the market. What do I mean by 70%? If you take a buy, for example, and the market is not giving into profit, calculate your 70%, at least at most here should be your TP. Because sometimes the market can do this, come to this point, and continue selling and take you out again. So once you don't wait till you hit up to the top before you take another sell or whatever, you understand? We're not dealing on point of interest, please. So don't be expecting me to disclose any uh, what I see or any point I see to mark out my trades. This is just structure. So let me delete this and let's dive into the live chat. All right, so let's dive into the live chat. So this is XCUSD, and these trades are basically on continuation, apart from was this continuation? Yeah, this was also okay, this wasn't continuation, this was a break. All right. So like I even forgot to explain what I was explaining on the this thing was just a breakout. You understand? Break and retest. So now I forgot to talk about continuation of a trend. If we're having an uptrend, for example, and you want to still catch that uptrend movement, like you believe you don't want to go against the market movement at that particular time, what are you gonna do? So this is it. Once you have the market now moving on an uptrend, this is an uptrend movement now, and this was your previous low. This was your previous low, and this is your previous high. People are still saying it's not working out. I don't understand. Guys, please tell me on WhatsApp. Can you hear me and can you see my screen? Can you hear me and can you see my screen? Update me on WhatsApp. And you guys can hear and see me. Not people are saying they can hear me, they can see me. And loud and clear. I don't understand. See, these people are saying they cannot see my screen. Please, which phone are you using? Are you using Pop 2 or Nokia Touch? Me there. Like this. We use POS phones and this is, it will either be your network or your phone. Please, I will just continue from where I see. So, like I said on continuation of a trend, for example, now, I said if you want to still catch that same trend, like you know that okay, remember continuation of a trend is different from a breakout. If you are expecting the market to break structure, you are already expecting the market to hit the certain point. So, what do I mean by that? If this is a high and you believe the market is going to sell at that high. So the market start buying to that point, for example, buy, and stop to that high. So now it has hit up to that high, giving it equal levels. And the market breaks through, for example. You already knew the market is going to sell at that point. So now when the market breaks through, it will now look like a confirmation. But we're not dealing on point of interest. Our point of interest class is later. So you will now use the point of interest pattern and teach you to execute that particular sales to continue it all the way to the downside. You understand? But for a continuation of a trade, once you know that you want to continue that particular trend that the market was giving you previous, like since, you are just going to look at higher time frames to look if there is any obstruction here to know whether that trend is going to continue. But that will be for top-down analysis. I will explain all that later. This is just structure. So but I'm just trying to play you guys up because even though yesterday recording I dropped, a lot of you were showing me result that only that recording, look, they are cashing up some trade. And a lot of you are like, you guys are quick in learning. So I just want you to know this so that you will not gonna hit unnecessary SL saying you just plan structure and you want to quickly catch something. So please, if you know that you are going for a continuation of the trend, always make sure you check your higher time frames. And this is not something I'm supposed to be checking right now. This is top down analysis class. But always make sure you check your higher time frame to see if there's anything obstructing you. You understand? If there's something obstructing you, not your buy that you want to continue. Like I hardly hold. See, there is nothing that you believe that, okay, this trend I'm about to crash, we continue. This is how I crash my continuation of a trend, same structure pattern. So I will mark the high and the low. So if it's an uptrend, I will mark the previous high and low. So this is my previous high, and that is my previous low. As you can see, my square already has a middle distance. I don't need to use Fibonacci to try to look for 50% or whatsoever. So I will now mark the 50%. So any trade I want to cash, if it's continuation of a trend, it will be around the 50% zone, meaning it will be from this zone to this point. And mind you, it's not like I'm going to use this whole point as my SL. I don't do that. It's called an outlook. Outlook is where a trader is planning on looking for his buy. It's not like it's going to sell around all those points. So it's for me to not take that buy to continue the trend all the way to that top side again. You understand? So this is how I do. Same thing for the sell structure. If you're having a sell trade and the market is giving you lower low and lower high, lower low and lower high, you just have to make sure that what if you want to continue the trend, always make sure that okay, this retracement that the market is about to create, I hope the market is not hitting up to any higher time frames to level it out. So those are things you need to take into consideration. So now this let's talk about this. Most of these trades are just scalp, just that I keep my TP at that same point. This was seen on 1 minute time frame, 1 minute time frame. Let me talk about major trade, not this major trade is what we'll be looking at for here now. So this is let's go to okay. Oh, thank God, this my neighbor this thing down. All right, so now this is it. If you want to take your trend on a particular time frame and you know that okay, this is where the my point of interest is, or this is where always make sure that your point of interest breaks structures. Hold on, guys. Okay, always make sure that your point of interest what break structure. So now let me show you guys some of my trade I've been using on just this structure pattern. On just this structure pattern. Let me show you guys. So this is a continuation of a trend. I knew that the buy is still going to continue from the low. So this is the low to the high. Okay. And now what did you notice? Like I said, once a structure has been broken and I know that okay, I am continuing on my buy trend, I do mark the highs. So if this is the previous high that was being marked out before, and that is the low at the downside. So all here was now seen as an outlook from here to here was seen as an outlook. Remember, we're not dealing a point of interest. There are stuff I do see before I speak my trade. So the major thing is that any place I'm taking my trade from, I will always make sure it breaks structure. So what did you notice? This is a continuation of a trend, but I took the trade from where break structure. And this is it. I already marked it out. That is the break of structure. So this was the previous high. The market created the retracement and still broke structure all the way to the top side. You understand? After breaking structure all the way to the top side, I always take my point of interest from where it has impulsive move, and this was the point with the impulsive move, the zone that has stronger movements, even if I'm on a what buy trend or whatsoever. So if this is a example, this is the market trend. Yeah. Once I see something like this, I would prefer to take my trade around this zone that has high volume in its movement, not all these short ones. I usually take trade from where it has high volume and not all these distance. So once I see this kind of movement, sharp movement from the down, shooting all the way to the top side, I'll quickly take my trade from all this kind of place. So that is also something you need to put into consideration. Any place you are taking your trade from, at least let that point have high possible. So let me quickly dive into major. I think this is more time frame. That's exactly supposed to be on 15-minute time frame. Okay. This is also continuation of a trend. Same rules apply. You understand? So I knew that the market is buying, and as the market is buying now, this is it. Some of you will say this is an uptrend, but why is it that this low was being violated? Let me delete this first. Okay. But why is it that this flow was being interrupted? Because if you notice, what I said is that once you have a retracement point and you are on an uptrend, the market shouldn't violate any of the retracement points. So on a violated retracement point just like this, you can see with the candlestick body, this is to tell you that the market broke structure to the downside. But there's still a reason why I did not still look for sell. So please, that's why I say don't just watch only structure plans or just listen to this structure plans and you say you want to rush into trend and place them. There are still some things that will disclose on our way going. You understand how to identify if the market is still going to continue on the same trend. We'll still talk about that later on. But let's just talk about the structure for today. So now, what did you notice? I usually take my trade from where it has a positive move as long as I'm trading on continuation of the trend. So I knew that this point has to be broken first. If this zone wasn't broken, this is a major resistance point. If this major resistance point wasn't broken, I wouldn't have taken the buy. But- And one thing also is that I make sure that the market must break structure even on that continuation of the trend. So you could see that the market broke structure around this zone. This was the previous side. The market broke it all the way to the top side, also breaking a resistance zone. So what did I do? I marked the 50%, which is the high. This is the high of the market, and that is the low of the market. If I'm marking my 50%, I might go the weeks. You understand? I might go the weeks. But if we're talking of break of structure, you don't look at weeks as break of structure. So that is it. So that is that zone now I marked it as my outlook. There are still some things I look out before I execute my particular trade, which is the point of interest class we'll be dealing on our next session. This is just structure. So let's forget about that one. That one was 1 week, 1 minute time frame. Okay. So same thing for this trade also. What did you notice on this? A this was a buy trade. Market went up, came down, it went up, came down, went up, came down, went up, came down, went up. So this was a clear uptrend, as you can see. The market wasn't violating any of the retracement points was being created. So this was previous retracement, previous retracement, previous retracement, previous one. And what did the market do after that? The market broke structure all the way to the downside. So this was our previous retracement, but instead the market broke structure all the way to the downside. So tell you that what a sell trend is what is about to come. And what did I do? I took my sell trade using my point of interest pattern. So same thing for this buy also. What do we have here? We are having series of sell. So let me shift this out. But I closed quickly on this trade. This was the trade I reached $5,000 and I closed at $18,000 because of the range. The market was getting too close to my point of interest. I got scared and I closed. This trade was supposed to give me $85,000 if I'm not mistaken. It's been long though. So what do you notice about this trade? This was also a sell trend. So you can see the market sold to the downside, went up, it sold to the downside, went up again, sold again. Now it's expected of the market to create retracement and still continue that sell. But what did the market do? The market went up. After coming down, the market went up, created a retracement zone. This retracement zone, after retracing, is supposed to break the structure to the downside, but rather the market came down, wasn't even able to break the structure to the downside, rather went to break the structure all the way to the top side. So this was the previous retracement zone that has been validated. This is another previous retracement zone that has been validated. So what did I do? I applied my point of interest and executed this trade because I know that what a buy structure has been validated. So this is just the breakout. The first ones I explained to you guys was continuation of a trend. Okay, this is the last one I'll just explain because I think a lot of trades are already here, and I'm pretty sure it's already I've already disclosed a lot to you guys already. Who is this person called? That's why I want to leave WhatsApp. I need to leave WhatsApp. All right. So hold on. Let me block this person. Okay. I don't like calls. Am I gay? I'm blocked the person. So okay, where do we start? Okay. We're having a sell trend now at this point. The market was selling, it came down, it retraced to the top side, it came down again, it retraced to the top side, it came down, it retraced, it came down. So this was a clear sell trend, as you can see. The market was selling. And after that, the market created equal highs. Creating an equal highs, if there's a two retracement points, it is not a bad thing, as long as the previous one didn't violate the old one. I don't know whether I get what I'm saying. Like if this break since, if this one came to this side, I would have said, okay, break of structure has already occurred since. But something like this is equal levels. You can still continue on that yourself then. But what did the market? The market after reaching that equal level, the market is supposed to get momentum because it has hit up to a major distance. It's supposed to get momentum and push all the way to the downside. But rather the market even failed to come to the down, another way to break the two equal levels it created before. So this is where the major break of structure got. And what did I say? I said I love taking my trade from where there's an impulsive move. So this is the impulsive move zone, and it's also where broke the structure zone. I executed this trade using my point of interest pattern. So let me just show you one more trade on 4 hours time frame. That's very, very clear. Please, guys, that sell that I marked out here, don't go and say you want to sell, please. If you shop yourself, it's your own. I did not say I'm taking that trade, so please be careful. So this is 4 hours time frame, and this was my major TP on this trade actually. But at this particular point, gold was buying so massively, so I quickly closed out of fear. That was where was supposed to be my initial point of interest. So how was I able to execute this trade? Firstly, we are having series of buying. So this is it. This was the previous flow. The market went up, came down, gave us a retracement, went up again, gave us a retracement that isn't able to violate the previous retracement, broke structure, another retracement, broke structure, then it break, it changed character, sorry, then it changed character all the way to the downside. So this was an uptrend before, but rather instead of the market to continue that uptrend movement, the market went and broke the downside. Still same thing with what I've been showing you guys online pattern, just like this. This is exactly what I was explaining at first. It's a breakout. So it's exactly what I'm also showing online on the live chat right now. So once the breakout occurred, what did I do? I started looking for my sell trade and I executed it. So, like I said, we're not in a point of interest today. This is just structure. And I'm pretty sure I've been able to disclose and open a lot of you guys' eyes on this. So, for questioning, Telegram won't allow you guys to speak up. So, this is it. If you have any question, quickly type your question on my WhatsApp right now. I'm about to check my WhatsApp. Please, important question on structure. On structure, please don't talk about point of. Don't ask me. Wait, if you ask me a question on point of interest or whatever, I won't answer you. So, if you have a question right now, come to my write it on my WhatsApp, and I'll be talking about it right now on the screen. So let's do that, and I'll be taking maybe just 3 questions. All right, let's go. Okay, someone said I should talk about time frame. Okay, this is it. We haven't reached yet, but it's not a bad one. You can use for this is what I'll just tell you. Daily time frame and 4 hours time frame. are this thing are structural time frames. What do I mean by structural time frames? Are directional, or will I say daily time frame and 4 hours time frame are directional time frame. And why am I saying that? Is because of it is the time frame I usually use to know the market direction. You understand? The market direction. Then 5 minute time frame, 15 minute time frame, and 30 minute time frame are what point of interest time frame, meaning the time frame I usually use to get a particular point of interest at that time. So you can write that down. I repeat, 5 minute time frame, 15 minute time frame, and 30 minute time frame. Is what sometimes 10 minutes also, don't forget. It's what I usually use for what point of interest time frame. 4 hours time frame, daily time frame, and sometimes 1 hour time frame, I use it for directional time frame. So I'll be taking one more question. I've answered your question. The person asking for time frames. Okay. Another important question. How do you know How do you know where the market is heading to? How do I know where the market is heading to with our top-down analysis skills, which is the third section we'll be having? This is about structure. So this your question is not really inside of what we're talking about. So another question, okay? The breakouts, continuations, and the ranging markets, are they the only structure? Yeah, those are the major structure. You don't need to know. I don't think there's any other structure. The only thing we do have in the market is up, down, and shopping market, which is still ranging. That's it. Okay, when you say okay, when you say impossible, do they create fair value gap sometimes to execute an entry? No, I don't. My point of interest. When we'll be talking about point of interest class, you guys will be surprised. My point of interest don't have to do with anything about fair value gap. Doesn't have to do anything about fair value gap. Although my fair value gap indicator is on, but I don't use it. This is it is on. I just off it. Look at it, it's out now, FVG, FVG. So my point of interest has to do nothing with fair value gap. And that is about point of interest class, please. How do you make your SL so small? Okay. How do you make your SL so small? This is a nice question. And that is about point of interest. They said ask question on structure. Somebody is asking, how do I make my SL so small? We'll be talking about that on our next class. Our next class is point of interest. I'll be talking about all that. So next question, please. This will be the last question I'll take. What should we do when price create a structure but move a bit and create another structure? Which one do we choose? Okay, when price is doing like that, meaning the price is ranging on a higher time frame. Yeah, that's just a ranging market. And once you see that kind of market, don't trade it. Don't trade that kind of market. It's not every market you see you trade. What if market doesn't retest the, this is the kind of question I like about structure. What if the market doesn't retest back to 50% you mark? If the market doesn't retest back to the 50% that you mark, don't force yourself, just keep the trade. It's not something that the market is not something that you need to pursue. At least the market needs to come to you rather than you pursuing the market. So if the market doesn't come to your 50%, don't rush yourself, just leave it. But still, when we talk about point of interest, there are still some things I will explain and you understand that not every time you within on that 50% though. Yeah, not every time. So more things will be disclosed later. Okay, this is the last question I'm taking, please. Fine, in this section. Can you talk about break and retest? Somebody said, can you talk about break and retest? We do they talk about. All right, guys. So I'll be sending you guys a video recording. I'll be sending. Okay, I want to ask, did you put that line on the other block instead of using that Fibonacci? Please, I don't use other block of Fibonacci fair value gap as my. Wait. Okay, okay, I get your question now. I want to ask, did you use the line on your other block instead of using Fibonacci? Okay, that somebody's asking if I use the line on my other block of Fibonacci. Yes, I use the line on my other block. Is in your setting. If you go to your setting inside your other block, you will see 50% cuts. So instead of me using Fibonacci, I just use the 50% of my other block, which is still the middle average of the percent to make it easier for me rather than using Fibonacci. So done with answering questions, and people are confused how I did 50% on my favorite on my other book, and let me just show you guys that. So if you tap your square stuff, this is your rectangle stuff. If you tap it now and you mark it out, once you mark it out, you see setting button. So this is your setting. If you tap your settings, listen now, I'm explaining how to put the line, the middle line. If you tap your setting, so it's just about you. Just go to your square on your trading view, tap it, you see this setting icon. Tap your setting icon, then you see middle line. Look at it. If I off my middle line, all my middle line will be gone. Can you see? There is no middle line. So I'm pretty sure this is how yours is. So if this is how your own is, you tap it. You go to the setting at the top. Once you do that, you see middle line. Just for you to tap the middle line and it's okay. And you have the middle line, which is the 50% of the distance. So we are done with today's section, and I'll be sending you guys the video I'm recording on the thing. So